Yo, what up, YouTube? What up? It's our Capital Options Day Trading Mentorship Class 14. Today we're going to be going over our weekly market prep routine, showing you guys how to go throughout the market day by day on the days of the week, and going over how to maneuver through news, especially with a jam-packed week like this week. Tomorrow we have MU earnings. Tomorrow we have FOMC. We had the NVIDIA keynote earlier this week, so just showing you guys how to maneuver through this news. So going forward here, your trading journey, the missing link. You know how to trade. Now it's learning when to trade and how to prepare, right? So classes 1 through 13 built your complete technical system. Class 14 teaches you your weekly routine that activates it. So your ARC Foundation recap, classes 1 through 3, we went over option basics, price action, weekly scalping, and zero DTEs. Class 4 through 9, we went through the ARC clouds, the VWAP bands, key levels, and a watch list that you guys should be watching daily. And then classes 10 through 13, we went through entry confirmations, execution, trade management, and zero DTE scalping. Class 14 is weekly prep, the Sunday through Friday operational routine that turns your ARC trading system into consistent, repeatable execution. Right? Hello. You want to go?
Why? Yeah, I got it. Why weekly prep is non-negotiable, right? The best traders don't just react to the market; they show up already prepared. Prep is what separates consistently profitable traders from gamblers, degenerate traders with no system, novice traders, and whatever, right? So without weekly prep, you're chasing moves blindly. You don't know where levels are until it's too late. You're trading into news events, you're getting caught off guard by CPI or FOMC with open positions. You don't have a game plan and you are taking emotional trades. FOMO and revenge trading take over your session and will likely end up blowing you up. Now, we don't want to see anybody get blown up. So, you also miss a lot of high probability setups, not knowing which stocks are truly in play that week, not being able to spot the strength, not being able to spot correlation, right? Mark correlation, see if sectors are running, and be confident in taking your trades, right? But now with weekly prep, your levels are already marked: previous day high, previous day low, support and key support and resistance. Your VWAP zones are ready for before open. The clouds are right if it's in a bullish trend or a bearish trend. Your calendar awareness is on point. Exactly when to sit out if there's news, or when to size down if you are going to trade through news. And this is something that we have been honestly spot on this week with. We have not been trading aggressively, and that gets boring. We all want to make money, of course. But in my opinion, it's better to stay conservative when the market is weird and tough rather than taking unnecessary risks and potentially taking unnecessary losses, right? When to sit out and size down. And we have been sizing down and sitting out this week, right? So you also have a clear game plan. And when you have a clear game plan, you have confident execution. You enter trades with conviction, not hope. You know where your levels are, and you have a clear mind and confidence going into these trades. Your watch list is curated, so you're only tracking stocks that meet your ARC criteria this week, and you're also following stocks that are correlating with each other, right? So the best trades come when you are seeing correlation happen in the market. Prep doesn't happen during market hours, it happens before the bell rings.
Oh,
Shout out to that pre-market with Rich. Hello.
yes, sir. So, the economical calendar, your weekly Bible. Every Sunday, your first task is opening up the economical calendar. This tells you which days require extra caution or full avoidance, right? So showing up to those Sunday prep classes, you are going to be updated with all of this, right? Extreme with any events that are going to be happening throughout the week, any Fed speakers, any earnings. So just showing up to this class alone is going to prep you guys enough for the week, right? But if you on your own want to prep before we have Sunday class, go search up the economic calendar. I'll make a section in the education center linked with where I find all my news, right? So, high impact events to track every week. Extreme caution events, FOMC, interest rate decisions, right? So tomorrow is a very good example of FOMC, right? It's going to be an extreme caution event, guys. So what does that tell you? You're either going to stay cash or you're going to go light in size till afterwards, right? Another event that you need to keep your eyes on is CPI, Consumer Price Index, job reports, right? No non-farm payrolls, Fed chair press conferences, right? Then you have high impact events like PPI, retail sales data, GDP reports, and earnings. Monitor events, you have jobless claims, manufacturing data, consumer confidence, and FOMC meeting minutes, which is just a recap of what the actual FOMC meeting said. So doesn't cause as much volatility as the actual interest rate decision, right? So what are some tools to use? Investing.com, economical calendar, Earnings Whisper for earnings dates, TradingView economical calendar, or the CNBC pre-market briefing, right? So, rule, if a red flag event is before 10:30 a.m., consider sitting out the open entirely. Let prices settle first. This is something that we already practice. For the most part, guys, we usually don't trade the first 30 minutes. Let the direction clear itself. Let the dust settle and get a clear retracement to the clouds, right? Or bounce to the clouds or whatever you want to call it, right? So moving forward here, Rico.
The Sunday prep routine, step by step. Sunday is your most important trading day, even though the markets are closed. This is where you build your edge for the entire week. You check the economic calendar, takes 5 minutes. Note every high impact event for the week. Mark which days require reduced size or no trading and write them down. Don't rely on your memory. Review last week's price action. Pull up SPY and QQ and your class 9 watch list. Where did prices close? Are we near any key levels? Did we break out or reject from any major supports or resistance? This is what you want to look for and identify. Mark key weekly levels on the weekly chart. Prior week high/low, major support and resistance zones, psychological levels, which are just round numbers. These become your macro roadmap for the week. Now, you guys should start to see in these Sunday classes how I look at things. For NBIS, we had our highest weekly close. Said something. We note these things. Set your week or build your weekly watch list from Class 9's core list. Identify which stocks have upcoming catalyst earnings, any FDA decisions if it's like a stock like Lilly, or any product launches if it's any other stock. Add 2 to 3 in-play stocks to your focus list for the week. In this case, we have MU earnings this week. So what are we watching? We are watching SNDK, WDC, STX, and MU. We're watching the whole sector, and everything is approaching highs. Set your weekly game plan. Write down bullish or bearish bias for the week. What levels confirm or invalidate that bias? Which days look cleanest to trade? And what's your max loss for the week? So this takes usually 45 minutes of your time. This 45 minutes can save you from hundreds of dollars of preventable losses. Does not take long to do this, guys, especially if you're looking at the same stocks. We have the watch list. If you go into the ARC alerts and watch list, look at the ARC watch list and copy that.
Hello. All right. Marking your levels for the week from Class 8. You know how to identify your levels. Now learn how to organize them into weekly priority hierarchy. Level priority, highest to lowest. So, tier 1 are your macro levels, monthly/weekly chart, right? So you're going to be going from highest time frame to lowest time frame, right, guys? So, starting with the highest time frames, you have your monthly and weekly chart. All-time highs, major multi-month support and resistance zones, round numbers. These are walls. Price reacts hard here, right? Then you have your weekly levels, which are prior week high and lows, prior week high, prior week low. Price frequently revisits these at the open on Tuesday or Wednesday for your tier 2. For tier 3, you have your daily levels, so previous day high, previous day close, previous day low. Class 8, previous day high, previous day low, previous day close. Your day-to-day trading roadmap. Recalculate every morning before open. And then for tier 4, you have your intraday levels, right? So you're monitoring these consistently since they are, right, dynamic, meaning that they change with the price. They follow where the price is going. They're right. So from class 5 and 6, dynamic levels that update in real time your intraday bias and entry and exit zones on the 10-minute chart, right? So pro tip, when multi-tier aligning or when multiple tiers align at the same price, that is a high conviction confluence zone from class 7. These are your best trades of the week, right? So let's say we're breaking out of all-time highs and we have previous day. We're breaking out of previous day high, which is, let's say, 2 points away from that all-time high, right? You can use that little zone, that $2 gap zone, as a beast zone, where if it breaks over that previous day high, you can anticipate price discovery mode. So moving forward here, Rich, if you want to talk about one of our favorite indicators here that we use to review the market conditions.
Reading the VIX, the market's fear gauge. The VIX, the volatility index, measures how much uncertainty exists in the market. It directly affects how you size, time, and manage your trades. Now, what does this mean? If VIX is under 15, at or under 15, the market is in a low volatility setting. Market is calm and likely trending. Cleaner setups, tighter ranges, good for trend following trades. Option premiums are usually cheaper, and these are ideal ARC trading conditions. Now, when VIX is to 15 and 25, these are moderate volatility conditions. The market has elevated uncertainty, wider ranges, bigger price swings throughout the day, still tradable, but with discipline. Consider reducing position size, trade carefully, tighter stops. Now, this is the kind of market that we are in right now. Honestly, we are in a high volatile market, which VIX is trading over 25. So we are pretty much at that 23, 25 area. And when VIX is at or over 25, the market is in a high volatile state. Now, what does this mean? The market is fearful and chaotic. Whipsaws and fake outs are everywhere. Premiums are outlandishly expensive. High risk of getting stopped out. You either need to reduce your size in these market conditions or sit out. Markets on expert mode. When markets on expert mode like this, you need to relax. You need to sit out and be okay with sitting out. Not every day is about trading. Every day is about making sure you have the money to trade. Don't just chop yourself up. How VIX connects to your ARC system. High VIX, ARC clouds give wider signals. Wait for stronger confirmation. High VIX also equals the VWAP band expand. Don't chase extended moves. When VIX is low, there are tighter confluences. The tighter confluence zones from class 7 work better. Always check VIX before placing your first trade on the day. VIX next to QQQ and SPY is a cheat code.
Guys, before we continue to the next slide, is there any questions? Is everything clear? This is something that we preach, we breathe, we follow these same exact practices. So just if there's anyone that has any questions so far, or if everything is good, let us know in the chat. No, it doesn't look like anyone has any questions. So, earnings and catalyst awareness. Earnings reports are the single biggest catalyst for price movements in individual stocks. Knowing the schedule before the week starts is essential for your Class 9 watch list. Earning rules for ARC traders. Never hold options through earnings, or unless you're holding a lotto. IV crush can wipe 50 to 80% of the premium, even if the direction is right. Don't add size before earnings. Gap risk is unpredictable. Protect your account first. Guys, please make trading about the growth. Don't make it about the quick wins. Don't make it about the lotto plays that do go to 500%, right? You need to make it about the consistent growth and taking the highest probable trades. And sizing up before an earnings trade is simply not the highest probable thing. It can pay out. Don't get it twisted, but it's going to burn you more times than pay you, right? So it's better to just avoid it overall. So avoid trading the day before earnings. Price goes sideways, waiting. Choppy, low probability day on that stock that has earnings, not on the market as a whole, right? So earnings opportunities. Post-earning gap plays. After the report, gaps often fill. Use Class 8 gap fill strategy. Earnings week. Big movers create sector movement. Trade the ripple effect on your watch list. Guys, we talk about this so much. Sympathy plays, right? Sympathy plays are simply a way how to catch the move on an earnings without playing that stock and risking that IV crush, right? So if, let's say, the earnings and the guidance are reported to have good earnings and they're reported to talk about something huge that can affect the market as a whole or that sector as a whole, you can take advantage of trading other stocks in the same sector. That's what we call a sympathy play, right? So, day after continuation trades, strong earnings plus break of key levels equals high conviction momentum trades. You love those, right, Rich? You love when we have great earnings, when we break through a key level and everything's just lining up. The whole story's saying go.
Absolutely. Those are usually the home runs for us.
Yep. So, rule check earning dates for every stock on Class 9 watch list every Sunday. No exceptions, guys. Right? So, boom. You want to talk about this, Richie Rich?
Trading around FOMC, CPI, and major events. These events can move the market hundreds of points in seconds. No ARC setup is worth the risk of trading blind into a major catalyst. FOMC meeting day rules, which we should abide by tomorrow, is before 2 p.m. Market often trades sideways, pretty low conviction day. Small size if you're trading, or skip the morning session entirely. 2 p.m. to 2:30 p.m. the rate decision drops. Extreme volatility. Do not be in a position. This is not an opportunity. It's usually a trap. And then post decision direction to become clear. Use your class 13 0DT system. Once trend is confirmed, this is your best window of FOMC days from 2:30 to 4 o'clock. Now the CPI day release. This is a pre-market thing, and we don't trade futures in the pre-market, so this is just something to also note. 8:30 a.m. release. CPI drops before market open. Expect a massive gap open. Do not play the gap blindly. Wait for price to settle. 9:30 to 10:30. First 60-minute is chaotic. Price discovery mode. Doesn't know if it wants to go up or down. The move you will see at open is almost never the real move. After 10:30, once a confirmed direction is established with class 10 entry confirmations, this could be a high momentum trading day. Whether it's a gap down to fill the gap, you're taking puts to fill the gap or whatever, or it's a gap down and you're taking longs to fill the gap up. You can get some nice trading setups on days like this. The easiest trades come on normal days with no major events. Patience is a position, like we have been this week. Sometimes the best trade is no trade.
So, daily market prep routine every morning. Your Sunday prep builds the blueprint. Your daily pre market routine activates it. Run this every morning, no shortcuts, right? So, this is for everyone on the East Coast. You should be waking up at least 8 a.m. Doesn't matter if the market opens up at 9:30. That is 1 hour and 30 minutes before market opens. You should be up out of bed. If you really are taking this serious, you should be awake. So from 8:30 to 9 a.m., check overnight news and futures, right? So are SPY QQ futures up or down? Is there any breaking news that could affect your watch list? Check pre-market volume on your top stocks. This really doesn't take a lot, guys, right? It takes just a couple minutes. Next, you can go on your computer, mark the previous day high, previous day low, previous day close. From class 8, update these levels on SPY and QQQ and on every stock on your watch list. These are your intraday roadmaps. Check the VIX pre-market. What is the VIX doing overnight? Is it elevated or is it calm? This sets your position sizing for the day before you even open up the chart, right? Everything is made for you to structure your day and to know the outcome or have a solution for any outcome that is presented to you in the market, guys, right? The more ready that you are for the situation, the more calculated you can be with your result, right? So, from 8:30 to or from 9 to 8:30, first things first, join the ARC pre-market analysis. Listen to Rich's daily breakdown. Know which stocks are most in play. Write down the top 3 to 4 focus stocks and their key levels for today. Set up your charts. Open all your Class 9 watchlist charts on the 10-minute time frame. ARC clouds and VWAP bands loaded. Key levels marked, ready to execute. Right? You should already be drinking your coffee, listening to Rich, getting ready for the day, having your levels already marked out. Right, guys? So, define today's trading perimeters. What is your max loss today? How many contracts max? What are your target prices? If the setups trigger, write it down, decide before, not during, right? So if you always go in with a plan, it's way easier to control your emotions going into the day, right, guys? Just be real with yourself, trade with a plan, and I just can't wait to announce what I have here at the end of the class. So if you haven't completed this routine by 9:30, do not trade the open. Wait until 10. Only use class 13's post open window, right? Boom.
Hello. All right. Go versus no go days. Y'all need to hear this. When to trade or when to sit up. Not every day deserves your capital. Knowing when not to trade is just as important as knowing when to execute. This is how you protect your account through losing weeks. On the go days, VIX is ideally under 20 or trending flat or down. No major economic events before 2 p.m. such as no FOMC. SPY and Qs are showing clear trend on the 10-minute time frame. Arc clouds plus VWAP confluence present. High volume in play stocks on your watch list. And you are mentally focused and emotionally neutral. Emotionally neutral is key in this. The no-go days, VIX is spiking above 25 or extremely erratic. FOMC or CPI releasing as FOMC day or CPI or any news being released at 10 or around 10 or before. SPY or Qs is choppy with no clear direction. You've already hit your daily max loss. You got to walk away before those emotions come in. Or if you're frustrated, emotional, and chasing losses, this is also a recipe for disaster. Low liquidity days before a major holiday, all those, right? Sitting out a no-go day is a winning trade. You preserve capital that you can deploy on a high probability go day. Hello.
Yes, sir. It's about being smart with your investments, guys. Being smart with the money that you have to deploy. Would you rather deploy it on a low probable trade, on a stressful day, on a day where you don't know what is going on, or a day where you know exactly what's going on, everything is confluencing, SPY and Qs are showing you the same thing? It's a pretty simple answer. So, the complete weekly prep checklist. Use this checklist every Sunday and every morning before the market opens. Don't trade until every box is checked. Sunday checklist. Check economical calendar. All red. Flag all red news. SPY and QQQ weekly chart close. Right. Review that. Mark prior week high and low on all your watch list stocks. Check earning dates for every watch list stock. Read Art Cloud's direction on a weekly time frame. Define weekly bullish or bearish bias. Write weekly game plan and max loss for the week. Identify 2 to 3 focus stocks with upcoming catalysts. And your daily pre-market checklist is check futures directions before 8 a.m. Note any breaking news events overnight. Update your high low previous day close on all watch list stocks. Check the VIX levels, determine sizing for the day. Confirm no major events before 10:30 a.m. Join our ARC pre-market class. Write down the focus stocks. Write down our levels. Open all charts on 10 minutes with ARC Cloud and the VWAP. And define your daily max loss and targets before the open. Risk reminder, consistent preparation does not guarantee profits, but failing to prepare consistently leads to preventable losses. Treat this checklist like a part of your trading plan.
Hello. All right. How weekly prep connects to every ARC class. So class number 14 is the glue that holds your system together. Every ARC class feeds into your weekly prep routine. If you don't know, here's how. Classes number 1 and 3 are foundations and options basics. Prep, which tells you which expiration to buy based on the weekly setup and any upcoming events. If you were on that little call that I got on earlier, you would have known why. We're trading WDC. We found our contract. We knew which one to buy. We knew this thesis and whatever. Classes 4 and 6 are technical analysis, R clouds, and VWAP. So Sunday level marking uses these tools to define the week's key zones before Monday open. Class number 7, combining in the indicators. Finding your weekly bias is confirmed when R clouds and VWAP both agree on direction. And class 8 is key levels. Sunday prep is when you mark your previous day weekly low and gap levels for the entire week. Class 9 is the watch list class. Weekly prep filters your 12 stock watch list down to 3 to 4 highest convictions play of the week. Classes 10 to 12 is the entry, execution, and management. Now, this classes 10 to 12 are crucial. The daily prep defines your entry triggers, contract count, and stop levels before the session starts. Class number 13 is the 0 DTE scalping class. Go/no-go framework and event awareness directly determines whether you run the 0 DTE strategy that day or not. Imagine trading SPY 0 DTEs on a day like this. Ugly. Hello.
So being able to identify whether it's probable or not to trade 0 DTs on that day is very important. And you do that by knowing what news events are happening, knowing what's affecting the market, where VIX is in comparison to SPY and Qs, every little thing like that, guys. Right? So, summary and what's next. Class 14 complete. You're now a prepared trader. The ARC system only works when you show up prepared. Your routine is now your edge. What you learned in class 14. Why prep equals your real edge. Prepared traders outperform reactive traders long term. Economical calendar, how to identify and navigate high impact weekly events. Sunday prep routine, 5-step process to build your weekly blueprint. Your VIX awareness, how volatility conditions change your sizing and execution. No go or go versus no go days, the framework to decide when to trade and when to protect capital, and your complete checklists, Sunday and daily pre-market routines that activate your ARC system. Coming up is class 15. We're going to be going over trading psychology and discipline. You have the system, you have the prep routine. Now it's time to master your own mind. The final frontier of consistent profitability. Topics FOMC, my bad. FOMO, fear of missing out, right? Revenge trading, tilt, loss aversion, discipline frameworks, and building the right trading mindset. Risk disclaimer, option trading involves significant risk and is not suitable for all investors. Past performance does not guarantee future results. Trade only with capital you can afford to lose, right? This is going to save you guys from having those emotional trades, right? Don't be risking your rent money. It's the last thing you want to do here. So,
Real life.
that was class 14, guys. If there is any questions before I do my little announcement, or just how did you guys like that class? Hello. Are you guys going to be going over this checklist? Are you guys going to be implementing this into your day-to-day life? Hello. Do you guys feel like you guys have it in you to follow a system and to come prepared every single day? We'll be uploading this to our YouTube, and we'll be also uploading the file to this class on our education center, guys. Yep, everything will be available to you guys. Don't worry. Everything will be available to you guys. And for my special announcement, guys, I am in the works of making an app/website where you guys can journal your trades, where you guys can have the actual checklist that we mentioned here. You can either have it on your phone or have it up on a website, and you can check it off day by day while you're getting into a trade, and it'll actually tell you, depending on how many confluences you have, the rating on your trade. Little things like that. I'm going to be adding a bunch of features, and it's going to be exclusive to ARC Premium members, right? So it's going to really work on that accountability factor. I'm going to even add a section where, let's say you put your account size for the day. It will tell you how much you should enter in each trade, and I can even make it to where you show it a contract and it'll tell you how many you should buy according to your account size. So that's what I'm working on, guys. I really want it to be something that helps you guys, not only you guys, but me as well. So the more information that we collect, the more trades that you guys take with the app and that you guys journal, the better statistic we'll have on those ratings, right? So the more trades that you guys take, the more trades that you guys journal, the better it's going to be able to help us and in turn help you guys become better traders, right? Hello.
Hey, bro.
Yes, sir. There's going to be a lot more features, guys, but that's just the framework for it right now. And eventually we'll have it to where it even tells you guys the pre-market levels that we're looking at, the plan as soon as you open up the app, notifications, even telling you guys if we're in a trade, little things like that. Little things to help you guys stay organized and truly follow this system.
W, bro. Let's go, bro.
Yes, sir.
It's gonna be good. No questions though, guys.
No questions? They know what's up. They smart. Yo, I love everyone here, man. Hello. Look at this. I see my boy Ink Society in here. Let me get right into it then. Dear Heavenly Father, I'd just like to thank you so much, Lord, for everyone who's joined this call today and for everyone who's listening to this video afterwards. I just ask you to continue to bless them with consistency, Lord. Give them the ability to follow this system with discipline and to follow this checklist and make sure that they're going into every trade with a structured mindset, Lord. I just also ask you to continue to bless us with opportunity this week. We know that this is a week with a lot of sitting out time due to the news events that are happening, but I just ask you to make the opportunity as clear as possible when it presents itself. In Jesus' name I pray. Amen. Let's get it, guys. Hello. 18 of you guys in here, all for the premium live call. I'm going to end the recording right now.